Good morning. This is the video newsletter for Buy Sell Short for Sunday, December 11th. Pretty interesting week, just as we expected. Market back and forth, waiting for that European conference Thursday and Friday. Of course, the rumors every other day there was a different rumor of deal, no deal. Thursday we had a pretty decent sell-off, and especially in small cap land, a lot of our small cap stocks got taken to the woodshed late on Thursday. Of course, we had a deal on Friday, and the market bounced back nicely. But even going into the weekend, despite the fact that we had a consensus in Europe, there was still the negative articles floating around there. Big one among them was that the UK did not agree to participate in the New Deal. And what you don't see in the headlines reported out there, and actually I need to find an article I was reading that pretty much sums it up. There's essentially one reason why Britain did not go along with this EU deal, and it's because it has a bigger stake in the financial markets and the banks, and most of the world is against the banks right now. The Lehman Brothers, MF Global, the massive run-up in commodity prices, oil and gold, all have one thing in common that most people don't realize. It all emanates from the London Stock Exchange, which lets you manipulate, for lack of a better word, your financials, and lets this crazy leverage that we thought disappeared with Lehman Brothers continue to get out of control. And what most people don't realize, there's a reason why U.S. banks and U.S. brokerages have subsidiaries in London, and it's because even though money, hedge fund money, and client money, which is deposited in the U.S. and has to stay in the U.S., there's quirky little rules in the U.K. market that let you leverage that money and use that money even though it's not disclosed here in the States. So Britain had a big stake there. You know, a large part of their economy, 10% I believe, is from this manipulation of leverage that we see. So that's the reason why Britain did not go along with the deal, just to give you a little history on that. But looking at the Dow daily chart, we have Europe out of the way. There's going to be, of course, continued "we don't believe it's going to work" articles floating around, which will bounce the market back and forth. But we are right at a breakout point on the Dow, 12,284. The index looks very, very nice. If we look at the 15-minute chart, you can see over the last week we've been stuck in this rectangle formation, and this typically is a bullish formation that typically results in a big upside breakout. So let's see what happens. We're going to be keeping a really close eye on that previous low of last week in the 11,950 area. If we hold in this range and break out, it could be a very nice little upside move going into year end. Looking at the SMH, we're still waiting for a breakout on this indice, but it looks like it could happen here real soon. And check out the Russell. This is what we care about because we play small cap stocks. Very nice symmetrical triangle breakout, getting ready here. What is going to be a light the candle move will be a break above the 200-day moving average, which is very, very close here. And such a move could see a really big move over the next month or so. I mean, we're talking, we could possibly see a 10 to 15% plus move on the Russell over the next several weeks. And that is why we are in small caps right now. We did go through quite a bit of pain. I know I did on Thursday on that sell-off, and a lot of those stocks did not recover. And, you know, I might have made a bit of a mistake going in a little bit early on some of these plays. I thought the time schedule would have gotten pushed up this year. This Europe crap sort of derailed that idea. But typically, when I start buying big every year, it is this upcoming week. This is typically when you see the bottom and rebound in a lot of small cap stocks, and this should continue over the next 5 to 6 weeks, and that is what we're going to be looking at. And let's jump into some of those plays. One of the stocks that hurt us big time on Thursday was MVIS, was at 45 cents, closed at, or was looking to close on Thursday at 40 cents, and somehow they were able to print a 36-cent close. Did bounce back to 40, which was the real close on Thursday, but this kind of pop our drop usually is followed by a pop. So let's see if that is the case going into this week. This is a big January popper play. I think we could be looking at 50% or more move on this one going into the CES show in the first week of January. And this is the week now on some of these plays that we've entered half positions. This upcoming, the next few days, is when I'm going to be looking personally to start adding to my positions on these stocks, and they all look very oversold. Quick mention on BWEN, the stair step continues to trade above its 20-day exponential, and the 8-day moving average is acting as pretty strong support. 84 cents is the next breakout, and we're still looking for that move to the 200-day moving average right now at 106. TRID volume has dried off over the last week, and when the stock is trading, or when a small cap stock like this that's been hammered over the last month is trading and volume is starting to drop and it's consolidating, typically that happens before a big volume and big price increase. So let's see if that is the case. Look at this setup right here. Again, we're looking for at least a bounce back to the 50-day moving average, and that's a 50 to 75% move, and it could go more. This is also a CES play, beaten down stock over the last month. These are the stocks that do very, very well in the near term. Quick mention on CYTR. Since that nice run up last month, walked down on lower and lower volume. Again, this was a stock also got hammered on Thursday. But remember, this upcoming Sunday, December 11th, is when they give their poster presentation of their leukemia data. Remember, they did not issue a press release on this, so we could be seeing some positive press releases coming this week and a move at least back to that 40-cent area. And again, this is a biotech stock, cash rich, down big, ideal candidate for a run over the next month. EDGR, again, similar chart setup as many of the other January pop plays. Breakout would be a move through 45 cents. We're looking for a move to the 50-day moving average at 60 cents. All the indicators are nicely oversold, and it's just a wait and see game on a lot of these stocks right now. MOTR, again, had a nice little pop on Wednesday, got a lot of Twitter pump, got all the way up to 138. Stock came all the way back down to where the move began. Of course, you don't see any posts. These guys are only long these stocks when they're moving. When they actually go red, they sold the top. Just get used to that game that a lot of these other websites play. But again, this stock was $2 a month ago. It's down here at $1.21. These are the kind of stocks that can quickly go on a big move and a breakthrough 140, 142, and we're looking for a move to 156 plus on this little stock. RNN, see the setup here? Same as a couple other stocks we just looked at. Breakout, 55 cents. Target, 70 to 79 cents. Beaten down on bad drug data, but they've got other drugs in the pipeline, and biotech stocks never die. Always manage to put in nice rebounds, especially this time of the year, and nicely oversold and just looking for an excuse to bounce. Our other biotech play, BNVY, 38 cents to 40 cents is what will light this one up. And, really, once this one gets going, we should see a move to that 45 to 50 cent plus area. Again, another stock that was trading at 60 cents just a month ago, all the way down on tax selling. Usually we see them bounce all the way back up. A good example of that, as I've mentioned, is IGOI, beaten down over the last month, bottomed at 60 cents, was down 50% over a month, rebounded all the way back up. These are the setups that do very, very well. And as you can see, IGOI has already started its January pop / Sanda rally early. There will be stocks that do this. There will be stocks like TRID or MVIS that take a little while longer to move. But, this time of the year, over the last decade, we've seen this strategy just work wonders. We're also working on some nice little January popper lists that should be sent out over the next couple of days. It's going to be a listing of a lot of plays. There'll be email alerts on some of them, and then it's going to be a list that you can do self-study on, sort of like the popper scans we do nightly. And a quick mention on that actual popper scan. Even though we had that big 200-point rally on Thursday, you'll note that the Popper scan, one of the lowest readings we've seen in many, many weeks. And that is a testament to this time of the year. We still got tax selling out there, but stocks are getting beaten down. I expect that to reverse course very, very soon. Remember, when the Pop scan gets low readings like this, it typically happens before a very big move. So let's see if that proves to be the case yet again. But I'm encouraged seeing the Pop scan where it is after that big move we saw on Friday. Gives me a nice little bit of confidence going into year end. So we've got some very, very nice setups going into this week. We're going to start jumping into some more plays and pressing the positions on the stocks we really, really like. We are still going to be in the backup chat room this week, and so I'll see you guys in there tomorrow. If you've got any questions, feel free to shoot me an email. Otherwise, I will see you guys in there tomorrow. Goodbye.